Welcome to the Experts on Mortgage podcast. I'm your host, Mike Eshelman. Incredibly thrilled. PJ Harrigan from Total Expert is here with us today. And I say totally thrilled because when I took School of Mortgage Banking 1, it was like, I think it might have even been the first day. Here's PJ, my instructor, getting me through my very first day of really going on my CMB journey with School of Mortgage Banking 1. So thank you so much for joining the show. How are you doing today?
I'm great. Thanks for having me. I feel a little naked. I should have had a bow tie on today because I probably had a bow tie on that day that I was in SOMB. So
100% you did. But you know what? Now, if you came with the bow tie and the jacket, then I would have been like, man, I'm really underdressed. I mean, I'm trying to tone it down a little bit with just a button-up shirt. So, thank you. Welcome to the show.
Glad to be here.
I want to get started just with, get to know you. So can you explain, how is it that you even got into this crazy mortgage industry?
Well, like most people, I planned to be a mortgage banker since I was a youth.
No one ever.
No, it's really funny how I ended up. And it all goes back to being involved on campus when I was graduating from Iowa State. I was lucky enough to be picked to be part of the business school career week committee. And because of that, I got early access to mock interviews. And someone said I needed to interview with the principal. And I'm like, I don't want to be an insurance guy. And they're like, oh, they do so much other things. Well, long story short, I ended up getting a job at the Principal Financial Group as a consultant to do time motion studies of all things. So I went through this whole process to get certified on doing time motion studies. And they came to me and said, yeah, we're going to put you on a long-term project in our mortgage banking group. And I knew nothing about mortgages at all. My mom, I'm from a single parent home. My mom had rented my entire life. And so I go to work in this mortgage banking area where I did workflow analysis. So I sat down with all these different areas of the company and went through the tasks that they were performing, flow charted them, brought them back together. And then we went through them as a group and said, how can we streamline this, take out costs, make it more customer centric, make it faster, what have you. And after doing that for a number of years, the COO of the mortgage banking group said, why don't you just come work for me? So I went over and started working in the mortgage department, really was kind of the gopher for all the senior leaders of the mortgage banking group. But what it did is it gave me this knowledge of the mortgage business that is, 4 miles wide and 2 miles or 2 inches deep. We talked earlier about offline about I'm kind of the jack of all trades, masters of none. So I know a little about a lot, which really was helpful when I got my CMB. But I was really blessed to get exposed to all aspects of the mortgage banking process. And from there, I got put into, I actually went back to the insurance company, did strategic planning rotation through our corporate group, then got asked out of the blue, like, hey, would you like to start running our West Coast operations for sales and operations of correspondent lending? And that took me from Des Moines, Iowa to Phoenix, Arizona. And I was in the correspondent world until I moved to Radian, where I ran sales on the West Coast for almost 9 years. And then I moved to Total Expert a year ago, which is totally different. Yeah. Still using my relationships, still using my knowledge of mortgage banking, just applying it to technology. And I did that because it's just something new I wanted to learn. So it's been a fun year.
Now, going back to, you mentioned the CMB and how you know a lot, or you know a little about a lot of stuff. How is it that you even discovered the certified mortgage banker designation from the MBA?
So I was blessed when I was at Principal to have leaders that allowed me to go to the school of mortgage banking pretty early in my career. I did school of mortgage banking 91, 92, 93. That's when you took the test still on tablets and chisels and back in the day. But so I got exposed to education. They encouraged me to be educated. And I first got exposed to it then. But then I was the gatekeeper for a lot of our partners those partners, especially the MI people, had to come through me to get to senior management. And one person in particular, Mike Rosser, who was our national account person from United Guarantee, encouraged me early on to get my CMB. And I put it off till 2001. I applied in 2001. I needed a few points, so I did the Future Leaders Program. I got picked for the Future Leaders Program. And then I found other reasons, like I did an ultra marathon mountain bike race a couple of years, put it off. So finally, I put the stake in the ground and I took it and passed it in 2003. But really, it goes back to two things: those leaders at Principal who encouraged me to expand my knowledge, and then Mike Rosser. And I'll say something. One of the things when I was on the CMB Society chairs that I take great pride in was creating the Mike Rosser CMB award that's given to CMBs who have given back to education at the MBA, because he was such an advocate for the CMB and for education in general in the industry. So he was a great mentor to me, and I attribute to being here because of him.
That's fantastic. It's always interesting to hear the stories that are out there, because I mean, you just get a lot of different answers. Some, like yourself, got exposed very early. Me, I've been in mortgage 17 years, and I wasn't exposed to it until, just about 2.5, 3 years ago. And, that was one of those where it's like, aha, this is what I've been looking for. I'm heavy on the origination side, right? So originations, processing under, like, I understand that in the marketing side in particular, but when it comes to servicing and secondary, with the capital market, I like totally Greek to me at that time, but I was so intrigued that I wanted to know more about the whole industry. And then when I heard about it, I was like, I'm all in. This is exactly what I've been looking for. So I know
I've tried. Oh, I'm sorry.
I was going to say there's been others that, like me, where it's later, after a dozen plus years of being in the industry, that, finally stumbled across it.
So I've taken it upon myself to really try to follow Mike's steps and be the Johnny Appleseed of the CMB. And I try to encourage people, no matter where they are. If I find younger people are just new in the business, I say, take the school mortgage banking, get involved with future leaders, be on this path towards your CMB, because if you're going to be in this business, be the best that you can and show that by having this designation. I think the best sales job I've done with the CMB is convincing my wife, who wasn't my wife at the time, to become the CMB. So, but I every chance I get, I take advantage. I really try to push the MBA's diversity and inclusion scholarship when I can, to get people, to take that and use that to go to school mortgage banking, and again, putting them on that path to the CMB.
Yeah, it's fantastic. I enjoyed my journey. I'm so happy I did. And through this podcast, especially, I'm trying to, let's make people more aware of the CMB, what it's about. And, kind of the somewhat intimidating thing is when you start to hear there's, a 6-hour written exam, and then you pass that, and then the reward for passing a 6-hour exam is you then have to do an oral exam in front of a panel of CMBs, which consists of questions about current issues in the industry. So today we're going to talk about PACE lending, PACE liens, and what the issue is with that. So, I'll kind of give a brief overview, and this is for anyone who wants more information on these types of issues. You can go to the Mortgage Bankers Association website, or reach out to myself, and I'll get you pointed in the right direction. But I'm just going to go ahead and read the quick, really the overview from the Mortgage Bankers Association, kind of tee up this conversation, and let PJ describe what the issue is really. So the MBA believes energy efficient home improvements can be beneficial for homeowners, but significant concerns exist when these improvements are financed with property assessed clean energy loans, PACE loans, financing structure lacking vital consumer protections and presenting lien priority risks to lenders. So we'll kind of stop right there. What is the issue with PACE lanes?
And as we talked offline, this topic appeals to me because I love the idea of doing home improvements that help save energy, help the environment. The problem with this is how it's executed. And the number one problem is really as it relates to the consumer and what this can do for the consumer. First of all, it's not a typical loan. They weren't, you don't have to submit to typical disclosures and review processes, underwriting guidelines. And so it's kind of the wild west of lending, because it's outside of the purview of a typical mortgage transaction. The second part is a lot of people get, and I'm going to generalize here, but a little bit snookered on these loans, if you will. They don't know what they're getting because, going back to bullet point number one, they don't have the same disclosure responsibilities. And it's not often that you hear a mortgage banker saying, we need more disclosure, we need more. But we all think about what's best for the consumer, and we need some more, they needed more disclosures here. So a lot of people got taken advantage, and they didn't know it until they went to, sell their house. And they find out that this was not a typical loan, that it was a tax lien, that they've been paying it through their tax assessment, for 20 to 30 years, and that it does encumber them. It takes first lien over their mortgage, and that can cause problems when they go to refinance or sell their property. From a lender perspective, the problem is if you did that first loan and then they get a PACE loan, say they redo their backyard and put in artificial turf or something like that. And let's just, heaven forbid, something happens and they have to foreclose or something. Well, they're in second lien now. And that puts the entire mortgage ecosystem at risk, because now that lender can't do what they have to do with that loan. So they're probably gonna take a loss on it, a bigger loss. And it just kind of snowballs and ends up being bad for the consumer overall, because it's going to cost them more money. The great thing is the NBA got involved, made states aware that this was happening. Because I think what happened is that states didn't realize the unintended consequences of these types of loans.
Right.
And the states got involved, FHFA got involved, the NBA passed legislation that changed how these loans were done and can be done. So there's been a lot that has taken place to help the consumer and ultimately help the lending industry because of this. We talked about it. I got solar on my house. I financed it. I did not lease it. But I've got a separate loan for it that's not a PACE loan. And I probably would have been a naive consumer had I not known about the issues tied to PACE loans that helped me ask questions when I went through the process myself.
Yeah. And that's, it's been intriguing for me as I go through, to your example, right? We just bought a house, 6 or so months ago, did a little bit of work on it and just moved in not too long ago. So we got our loan, our mortgage, about 6 months ago, and, potentially coming up here when we had solar and looking to finance, it's going to be the, same thing as you just put in your example. And had I not been aware of this issue, I could have been that potential naive customer as well. So, being in the industry and actually hearing, when I was running marketing for a mortgage company, I remember there was a time where loan officers all of a sudden up front taking an application had to start asking the question, do you have a PACE lien on your property, right? Because it started throwing a wrench, as I think it was FHA and maybe VA as well, right? They won't approve loans that have existing PACE liens on it.
And conventional.
And conventional, right? So borrowers are unaware that they're going to have to satisfy that lien in order to complete a transaction, because they were told that it's something that's tied to the property, not tied to them. So when they were to sell the home, it sticks with the home. Yet that's not the case.
And that's what happens is there's this like surprise, and it can cause them not to be able to even do the sale, because then if it's taking too much equity out of the sale, they don't have enough for their down payment. So it disrupts their approval on the new home they're buying if they're selling their home. And it's just a mess. And we haven't had this issue as much in Arizona, but with kind of a similar product that we talked about is people who lease their solar can run into the same thing when they go to sell, because it's tied to the house, not to the borrower.
Yep.
And that can, you're at the goal line and closing a new transaction, but now the borrower has to pay off that lease, or worse, the new buyer has to qualify for that lease. And especially in today's market where inventory is such an issue and people are stretching to get every bit of house they possibly can because of affordability, that can cause real problems. Yeah. And we're seeing it. We see it, like my wife being an originator, I live it vicariously through her, either through her own transactions or transactions for LOs that work for her. Yeah. And it's just, it adds extra stress to a stressful transaction.
Well, thanks for giving that overview. Certainly appreciate it. And thanks for joining the Experts on Mortgage podcast. Really enjoyed the time with you, and hopefully one of these days soon, whether at a CMB event, an MBA event, something, I get to see you in person again. It's been way too long since I've seen another human being in this industry.
It's I'm anxious to go back and see my mortgage friends. That's for sure. My cat as an office mate is just not very communicative. And so I'm anxious to get back on the road and see folks like you.
Right on. Well, thanks again. Appreciate it. And for anyone who's interested in becoming a CMB or looking at School of Mortgage Banking, Amber Lawrence is a phenomenal resource. So feel free to reach out to her. Please connect with myself or PJ on LinkedIn. We're pretty easy to find. And thanks for tuning in. Appreciate it.
Thank you.
Have a great one.
Thank you.